Welcome back in. I hope you're having a good day today. In today's video, we have a new installment to my monthly net worth tracking series. This is for March. So let's go ahead and get right into it. Another slow month for me this month. I have a seasonal job, so the winter's very slow for my income. I only brought in $23.65 this month. That was my total income. And then next up, we have rent and utilities. I'm paid $920.60 for rent and utilities total. Groceries for the month was $170.04. Dining for the month $231.80. I had spent a good bit on Valentine's Day and stuff. It would have been really low without that. Gas was a really great month again, 24 bucks. Miscellaneous $861. I had to spend 500 more bucks for my big trip that I'm going on in May, and I had a yearly cat deposit for my cat for my apartment, so that was another couple $100. That really sucks. At the end of the month, I brought in $156.91 after covering all of my expenses for the month. So let's hop over to the net worth page. Sorry, what was that again? 156. 156.91 is the net. All right. I ended up putting 100 of that 156.91 into my Roth IRA. I put $0 into my taxable brokerage, and I put $0 into my high yield savings. Once again, January, February, March, usually the worst months of the year for me. That's my total contributions for the month. Once again, rough month for me income wise, and I had a couple unexpected expenses, so I only got to contribute $100 to keep my checking account afloat, as I brought it down into the 700s last month. So here we go. Let's go over my account balances. For my checking account, it's sitting at $779.14. My high yield savings account is at $504. Had a little bit of interest come in. And then my brokerage is at 36, 110, 37. Down pretty big from last month. The market has been really rough for me. So no big deal though. I've been doing some things to combat that. Roth IRA 22 135 80. That's also a slight drop from last month. Considering I added $100, I'm down a couple $100. Car equity, we're gonna stick that to $10,000 per usual. And as you can see, my net worth at the end of the month is down almost, or a little, yeah, almost 4 grand from 1 month. Month over month, down 4 grand. From year to date, we're down over 5 grand. So it's not a straight line up and to the right when you're building your net worth if you're using something like the stock market, but that is how it goes. No big deal. I'm hoping for a solid month here next month so I can contribute into my Roth IRA and my brokerage account to buy some of the dips into some of these sectoral sell-offs that we're seeing in the market. I invest a lot into, I have a lot of my net worth into some of the software companies. They're getting one of the worst bids to start the year that they've ever gotten. Even worse than, for some of them, than the '08 crisis or the 2022 and the 2020 sell-offs. So some significant discounts out there in the market for me to buy up if I can reel in some more income this month. Hopefully I can. Hopefully I can keep my expenses down as well. I'd like to contribute about $1,000 next month. So that would be great, especially if I can get these stock prices to stay down. So that's how we're looking. That brings our total IRA contributions for the year up to $700. We really need to ramp this up. Hopefully the market can stay down for me over the summer. That's when I make most of my money. My 2026 taxable contributions are sitting at $1,075. That brings my total contributions for the year at $2,175. Not too bad. That's okay considering, like I said, the beginning of the year is usually really rough for me. So assuming that the market goes back to normal, we see for the rest of the year the market tick up just a bit. We should still be on track to reach 80, 90 grand at the end of the year easily, honestly. I plan on making my contributions for the rest of the year close to maybe 12, 13,000 for the rest of the year. That would be great. Here's our little chart. It's looking sad right now. Hopefully this gets a nice turnaround story towards the end of the year. I'd like to see this, this whole chart a lot higher than it is currently. But it looks pretty bad right now. It looks like a dying company is what my my net worth stock chart would be looking like if you looked at monthly. So let's go ahead and hop over to a compound calculator. After the setback, these numbers are going to look a little rougher. No big deal. Net worth, let's say I have 22 plus 36. Let's say I have 58 invested at the time being, 58,000. Monthly contributions. I think this is very, very doable for me, especially over the years as my income grows. On average, monthly contributions, like I said, as you can see, $100, 900 something bucks, 1,100 bucks. These are pretty rough months for me, but on average, like I'll probably have June, July, August around 2,000 bucks, maybe more. So let's say on average, I just contribute $1,000 into my investments. Annual rate. The market on average is returning about 8%. I think I can beat this. That's half of what I'm doing on this YouTube channel, is showing you how I plan to beat the S&P 500. But let's say I just match the S&P 500. Let's see what we're looking like in 10 years. We'll be sitting at 300 grand. 20 years, we're close to the million still. Let's see how many years we need exactly. 22, so 21 and some change. And we hit $1 million bucks, 21 and a half years. Not too bad. I just turned 25 in February. So I would be, what is that? I would be 46 and a half by the time I was a millionaire. And I think this is very reasonable for me. $1,000 a month, 8% interest rate on my investments. Let's ramp this up. Let's say I do 1,200 bucks a month. I think this is very reasonable. Let's say my low end goal for my investments is 12% every year. So let's see what we're looking like in 10 years. We're at 467, significant bump up from the 8% with $1,000 a month contributed. Let's do 15 years, almost at the million. So just that little bump up in contributions and in my annual rate. And I am way ahead of time with my investments. Let's see how many years I need. I'm sure 16 gets us there. Yes, it does. So it's 15 and a half-ish. Yeah, 15 and a half years with this pace. I'll be a millionaire by 40. Not too bad at all. And let's ramp this up even more. I think we could see this. I could contribute $2,000 a month on average, for the next decade going forward. I think this is very reasonable. And let's say my annual rate is 15. This is my high-end goal. I think I can do it 15% per year. That has me doubling my investments roughly every, I think it's like 4.8 years, something like that. I'd be very happy with that. Let's see what we're looking like in just 5 years. Let's see what we're looking at. 300,000, not bad at all. 10 years, we're close to $1 million in just 10 years with this rate and with this monthly contribution amount. Let's see if 12 years gets us there. It does. That's going to be 11 and some change. Yep, 11.4 years, 11.25. So 11 and a quarter years, if I get the 15% annual rate and I contribute $2,000 per month into my investments in my Roth and my traditional investment account, and I'll be a millionaire by the age, I'm 25, I'd be 36 and some change, and I would have $1 million net worth. That is very significant for me. I know everyone nowadays says $1 million isn't a lot. For me, that is a lot of money considering I make roughly $50,000 a year. So if I were to hit $1 million net worth by the age, if I hit it by 36, I think that would be a significant feat. And I think it is very reasonable for normal people like me to do the same exact thing. Even if you just focus on your income, you put it all into the S&P 500. Let's say you start with $0, right? And let's say you make $50,000. I think that's a very reasonable, income for people. Let's say you invest 5% of your income. So 5% is $2,500 a year. Divided by 12, that's roughly 200 bucks a month. You put 200 bucks a month in the S&P 500 index. Annual rate, you're going to get around 8%. You might get 9 or 10 if you're lucky. 8's the conservative number that I like putting. Over the number of years, let's see what you're looking like in 10 years. In 10 years, you have a decent foundation here, right? Nothing crazy, but it is something. $36,000 in investments, that's nothing to bat an eye at, especially if you're a younger person. If you're looking at, or if you're watching this and you're 18, 20 years old, if you have this by 30, this is a great start for most people. So let's see what we're looking like at 15 years. You're at 70 grand, and this is just 200 bucks a month. This is doing basically the bare minimum for investing. So 15 years, 70 grand. 20 years, 117 grand. 30 years, now we're starting to compound. We're at $300,000. and 40 years. This is, say if you're a 20-year-old watching this, you want to retire at 60. If you do the same $200 a month, you put it in the S&P 500, you let it sit for 40 years from 20 to 60, you're looking at $700,000. That's probably not enough to retire, but man, that is a lot more than nothing. I know a lot of people are going to say inflation this, inflation that. Sure, your $700,000 then might only be worth $400,000, you know, in today's money, but that's still a lot more than nothing. And this is, like I said, this is the bare minimum. This is if you have a average-ish income and you only invest 5%. Let's do these same numbers if we were to do 10%. So clear this out. If you invest $400 a month, $400 a month starting from scratch. You're 20 years old, you just started working, you get the annual 0.08% that you're going to get in VOO or SPY, basically the S&P 500. After 10 years, 73 grand, good start. 20 years, you're 40 years old, you have 235 grand, not bad at all. 30 years, 600,000 bucks. Once again, $400 a month. This is, I'm not asking for much, just start now, please. Especially young people watching, please start investing. 40 years at retirement age, 1.4 million. If you put $400 a month away into the S&P 500, you'll have roughly 1.4 million bucks in 40 years, which will probably be worth, I don't know, $1 million in today's money, which is, I think that's significant. Sure, things are going to cost more in the future. We don't know what the future holds, but I would much rather have $1 million then than $0 then, or, you know, 500,000 bucks. It's a significant upgrade. So that's basically what the whole point of this whole series is sure, I don't make the most money. Sure, I'm not going to be the best investor in the world. I'm going to try to improve my investments and do a little bit better than the market overall. But you don't even have to do that. Just with the 8% return, which a lot of times you do get 9 or 10%, which will help you out a lot if you run into that, you know, throughout years of investing. If you can get 9% compared to 8%, that's a significant upgrade for your overall returns. But the whole mission here is to show you how easy it is and how little it takes. 200, 300, 400 bucks a month, especially for my younger viewers. Please, please, please think about this. 200 bucks a month, you know, for 40 years, you become a millionaire just off of that. And with inflation, your income is going to go up. So eventually, if you make $50,000 now, in the future, you'll be making $60,000. We live in a society that is constantly, over the decades, constantly improving on GDP per capita. So people are going to continue to make more. Our system works. Even internationally, people are doing better and better over time as a human race. We have successfully, you know, turned third world countries into very successful economies. And that's going to continue to happen. So we have one of the easiest, most liquid, easiest barriers to entry investing tools in the world with the stock market here in the United States. And I employ all of my fellow Americans and fellow investors, people that want to do good for themselves, to please look into investing. You won't be very disappointed if you stay consistent and you stick with it for a long period of time. It could really change your life. Take a lot of stress off, take a lot of the worry off of everyday life and retirement savings. So yeah, that's all I've really got for you guys today. As you can see, we're still down on the year to date for the net worth. No big deal. I'm zooming out. This is going to happen. We're going to have plenty of months in the future where I'm down 5, 10, 15% of my whole net worth due to market drawdowns, due to my specific portfolio going down for a short period of time. No big deal. Stay on track. Stay focused. Start investing, guys. If you haven't already, please watch my other videos. I go over some of the basics, some of the things that I see beginner investors do all the time, mistakes to avoid, things to look for, all that good stuff. So I hope you enjoyed. Make sure to subscribe and like the video down below, and have a good day.